Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, June 10th. It's Alexis Garcia here, and stocks moved higher today with investors cautiously optimistic as U.S.-China trade talks continue. And in the stock market today, we'll be breaking down all of today's market action. And joining me to do just that is IBD News editor Ed Carson. Now, Ed, I've been assured you'll be very gentle with me today because I'm filling in for Ali, and you know this isn't my regular beat.
Yeah, it's not like earnings cheat sheet where I just really just don't treat you well at all. This time I'll treat you well. I do want to take a look at Quanta Services, Exelixis, and Google.
All right, well, let's go ahead and take a look at those stocks. But first, let's look at the major indexes. Let me pull up our trusty charts here, Ed. And we'll start with the NASDAQ here, up about 0.6%. Another nice day of gains, finishing in the upper end of that range. Nice volume here as well, Ed. So thoughts on this chart?
Yeah, it continues to creep up towards record highs. Yeah, there was that drop last Thursday. There was that one downside reversal, but it ended up being just a blip. This is why you don't get too excited by one day either way. And so we're just about 2.5% maybe off all-time highs. So continue to move higher, showing strong action. Ultimately, again, one of the things is that, and the indexes are all rising, there was weakness underneath, and we'll discuss that a little bit more, but Tesla and some other growth mega caps to a lesser extent were relatively strong. Tesla had a nice gain today, and you had some Google, which we'll look at. There's some other names that were just up slightly, and those helped offset some weakness in growth. It's sort of weird. There was breadth in the market, there was strength in the indexes, but underneath there was also some weakness in growth. So a little bit of a little less positive deep down below, but still look at the major indexes. They're strong. The S&P above 6,000, clearly more clearly above that recent range it was in sort of in late May and then was trying to get out of. So sort of that, above 59.50. Yeah, I sort of paused right in there for a couple of weeks and a lot of handles formed. So that turned out to be pretty constructive. So this is moving higher as well. Even the Dow is moving towards record highs. It's trying to get out of this area. It's right at the top of that recent range, and it probably has a little bit more to go to get to all-time highs, but even this is moving up and making some progress.
And let's just jump really quickly to small caps, because this one has been an outperformer in recent days. And again, 4 straight days of gains here, reversing a little bit, giving back some of those gains, but still finishing up about 0.5 percentage point here and flirting with that 200-day line.
Yeah, I mean, it's getting up. It'd be nice to see that getting above. If you want to see your weakest part doing all right, that's the thing where it's so the small caps having a nice little burst here, but you just want to see they get above that. So the sort of the trail end of the train is still looking pretty good.
And you talked about market breadth, so we're looking at the S&P 500 equal weighted ETF. This one with a gain of about 0.5% today. And again, as you mentioned, it looks like there's good breadth out there. So thoughts here with this one?
Yeah, this hasn't quite gotten above its late May highs, but you can see it's getting close. It's getting very close to those levels. And this outperformed, slightly the S&P 500. So while I talked about the mega caps, it was really there was growth weakness. It wasn't like it was only the mega caps. It was sort of like there's growth names that were a little weaker, but RSP looks solid today.
And you mentioned the issues with growth today. So let's take a look at the IBD 50 ETF. This one down about 1.6% today. So what was going on with this one, Ed?
There was a lot of broad weakness in the IBD 50. Sometimes the FFTY will fall because something that's high up in the IBD 50 will just have a terrible day, and that'll override just an okay day for growth. But there was really a lot of weakness. But you do see it bounced off the 21-day line. So ultimately, it wasn't that bad. But at one point, it was down about 3% or so. Pretty ugly move, especially because the indexes really were flat. So maybe this is a little shakeout. it has these from time to time, but there's definitely some weakness, a lot of names. So this is one reason why you don't want to go too crazy on any one day. Like if you bought, if you went from 10% invested to 90% invested yesterday in a lot of growth names, you probably felt some pain, especially this morning. And this is where we talk about being incremental a little bit. But it was nice to see the bounce back, just something to watch. And there's some growth stocks that didn't do great today as a result.
And you also wanted to highlight the semiconductor space here. So we're looking at SMH, and this one, a nice gain of almost 2% today. So what's on your radar here?
Yeah, there's hope that the China trade talks will mean some reduced export curbs on AI. We saw Taiwan Semiconductor do pretty well. They had some May sales, and just some other things like Nvidia rose. It wasn't really leading anything, but Nvidia continued to rise. There was actually some non-AI stocks that were doing pretty well. I mean, SMH has been this kind of mix of these super hugely important AI stocks, but then a lot of other chips weren't doing as well, and we saw those doing well for whatever reason. So that was a positive. So some breadth in this area. Again, the growth was concentrated. It was weird. It's like depending on what you look at, it was looking either strong, weak, or okay. It's definitely want to take a look at different things to get a grasp on the market today.
All right, Ed. Well, let's jump into those stocks that you mentioned, starting with Quanta Services. Now, this heavy construction company pulled back today about 1.9%. It looks like it's just right at this buy point of 348.90 here, just below it, actually. But what caught your attention here?
Well, this is just one of many stocks. I didn't want to go overboard and like, oh no, it's a panic. But there's a lot of stocks that were recent breakouts that were struggling today. I mean, kind of maybe they sold off yesterday, not sold off, they fell yesterday and then continued on today. This one, at one point, this was probably like 6, 7% off the highs it had been at, and just in a few hours, it came back, and so it's again it found support at the 21-day line. This is an AI adjacent play because they do a lot of things with electrical power and other things. So even if it's like, oh, heavy construction, that's the real economy, and it is, but it's very much fueled by demand for power, demand for data centers. So a lot of the heavy construction firms, and there's a lot of groups, and there's a lot of groups that have come under some pressure, like insurers, some medical products, market and exchange type stocks that the losses haven't been like dramatic, but sometimes they've either come back below buy points or come through key levels like say the 50-day line. So again, at the end of the day, this is fine. So if you bought the breakout, you didn't really need to sell because it never went that far below, especially if you bought it close to the buy point. But it's just something to watch. And it's just sort of like there was a lot of stocks like this today. Luckily, they closed pretty well generally.
And we could see the volume here at accelerating here
Yeah.
as well with that action. Let's go ahead and take a look at Excelsius. That's a biotech firm here. This one, again, also a little bit of the same story, coming off highs, down almost 0.9% today, but still just hovering above this buy zone of this recent breakout. So what are your thoughts here?
This is one to watch. It really didn't. I mean, it's sort of in the morning, sort of peaked a little bit up a little, but it really wasn't doing anything. If you look on a weekly chart, this one has been trading very tightly, sort of pulled back very dignified after 1 week, sort of pulled back from that earnings gap up. And it would have a 3 weeks tight, except for one of those weeks was up 1.53%. So it needs to be within 1.5% up or down for the weekly close. So it could still get a 3 weeks tight after this week, just trading in tightly. So if you get above those recent highs from the last couple of weeks, I mean, just the last couple of weeks, that could be a place to start. Maybe it tests the 21-day line officially because it didn't quite get down there. It's just something to watch. Maybe this doesn't work. Okay, again, it's like you can wait for that little bit of strength, see if it can bounce a little bit and show that strength. The volume hasn't been it's sort of dried up generally the last several days. Some nice growth on this name, accelerating revenue growth, accelerating and a really strong profit growth. So there's a lot to like about this, but just one for your watch list. I think this today was a watch list day. It wasn't necessarily, maybe you cut some losses because they were going, because some things were coming down, or you wanted to preserve some profits, and whether or not those worked out, you might have said, oh, I wish I hadn't done that, but it was understandable. But it was really a day more for watch list stocks. And this is definitely one that you could put on your watch list.
All right, well, let's take a look at Google Ed. This one moving on news today that OpenAI is going to ink a partnership with the cloud computing giant here to expand their list of data center partners. And this one, again, up about 1.4% today. Uh, what are your thoughts here, though, Ed? Actionable just yet, or again, another one to watch?
I think it's actionable. Again, it also depends on whether, if you want to get into this name, this seems like it would have been a good time to do it. It got above this 176.77 level. That's just sort of like an early entry above the 200 line. It's definitely an early entry. Let's be absolutely clear. This is not nearly high enough to be a proper handle. Another thing that's weak about this is that the relative strength line really hasn't bounced much. And that sometimes happens, honestly, with mega caps, especially when their growth is slowing. And we're seeing that the mega caps, after a couple of years of maybe cost cutting and this and that, there was reasons why a lot of the big names, they had some really strong growth. Well, a lot of them are slowing, more reasonable growth. I mean, these are huge companies, and so it's hard to be massive expansion. So you might just say, well, they may not have that same kind of massive relative strength. So this is one thing you could bet. You could say, you know what, this is just not powerful enough in terms of growth, in terms of stock performance, and that's fine. But it just this one was acting well, and we are seeing some of the mega caps come up. While it came off highs intraday, in the context of a 5-day win streak, it's made a nice bounce off the 21-day line. So again, you'd like to see more relative strength performance. You could wait to see if it does that, but we've seen Meta and Amazon and Microsoft. They sort of come up. The relative strength lines haven't been the greatest, but they've moved a little bit. So nice performance here.
All right, Ed. Well, thanks so much for your insights today. And that wraps it up for this edition of Stock Market Today. We'll be back tomorrow with more market analysis, starting with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And tomorrow, June 11th, our very own Ken Shreve and David Saito Chung will be hosting a free leaderboard webinar breaking down how that team is handling the tech trade. Definitely not one to be missed. So if you want to get more details there or sign up, you can head over to investors.com/webinar for all the information. And thanks so much for watching, and we'll see you back right here tomorrow after the close.